Wall Street is continuing to buy Zim stocks. So we're seeing BlackRock increase their holdings by 5% over the past quarter. We also saw State Street increase their holdings by 13% over the past quarter. What I'll do in this video is I'll go over the most recent earnings. I'll go over some Wall Street analyst ratings. And at the end of the video, I will go over the short interest for this company as well. So with that being said, let's talk about it. So obviously the elephant in the room, this wasn't the best quarter. The company missed revenue by $50 million, and the EPS missed by $17.28, posting a staggering $18.90 loss on an EPS basis. Obviously, we'll get into that in a second. That's obviously an issue. I'll give you my thoughts on that. But first off, I just wanted to go over the recent buying. So we got a 13F update selling, and it's good to see that institutional support for Zim is still strong. So we had BlackRock, as I said, increase their holdings by 5.7%. They're now the second largest holder. And then we also saw State Street increase their holdings by 13%. So two very large asset managers. Both of those asset managers are within the top 3 in the world. So the largest asset managers in the world are still buying the stock. Obviously, they're passive indexers, but it's good to see that their support for the company hasn't wavered, which is very important, right? If a large firm like BlackRock or State Street were to drop out right now, it would really negatively affect the stock price at this current time. With that being said, though, let's take a look at this earnings presentation here. So obviously this came out earlier today and the stock is down in reaction to earnings. And just to kind of give you some highlights here, the shipping company incurred a massive net loss of $2.3 billion for the quarter compared to net income of $1.17 billion a year ago. Its bottom line was weighed down by a non-cash impairment of $2 billion. Revenues fell 61% year over year as well. And they didn't provide any update on the dividend either quarters. So with that being said, let's look a little deeper into this earnings call. So just to talk about some of their main points, what they're trying to stress. So in 2023 to 2024, they see this kind of as a transition period where they're continuing to improve their cost structure. So they're adding cost-effective new build capacity, redelivering expensive COVID-era charters, and then they're advancing partnerships to improve efficiencies, strengthening and diversifying commercial presence, and they're adapting network and identifying new growth opportunities. So this, they're kind of trying to put lipstick on a pig. This wasn't a good quarter by any sense of the imagination. Don't want to kind of come off like simping for this company. At the end of the day, what I do on this channel is I acknowledge reality, right? I'm not going to call this a good quarter because it wasn't a good quarter. But with that being said, there's always positives to take away. So adjusted EBITDA as a margin was 17%. So results continue to reflect industry downturn, and their adjusted EBITDA is minus 213 million. Their margins are minus 17%. And then cash flow from operations, $338 million. Revenue down 61%. So, or excuse me, I just bunched those two together. Their adjusted EBITDA is down 89%. Their adjusted EBIT, earnings before income and taxes, is minus 17%. So, unfortunately, things are moving the wrong direction. And then operationally here, so carried volumes actually did tick up in the quarter, up 3%. The freight rate, unfortunately, was down 66%. Obviously, as I said, revenue down a big chunk, down 61%. And then free cash flow down, down a good amount. And then cash conservation rate up a good amount. So I think that's important for the company. Total debt also increased a good chunk as well. And then, net debt also increasing as you would expect. Net leverage ratio 0.9, and then cash bank deposits also down as well. So their cash is being depleted and their debt is increasing. That's not a good scenario. It doesn't take a CPA to understand that that's an unsustainable situation. And then, so they had new built capacity come online here. So they delivered 6 of their 10 by 15,000 TEU LNG fueled ships. And then they delivered 4 other of the 4 by 1200 or 12,000 TEU. And they delivered a couple other as well. And there are 5 additional vessels up for renewal, and there are 34 vessels up for renewal as well in 2024. So things have gone in the wrong direction. I won't kind of jam this down your throat. I'm pretty sure you get it at this point in time. And then the volume breakdown by geographic trade zone. So you can see that breakdown right here as well. So look, I mean, there's still a bunch of issues in this company, and freight rates continued weakness. We're seeing no recovery from current levels. Volume is expected to decline year over year. This is their full year guidance, and their bunker costs are expected to be higher than previously projected. So honestly, all kind of negative updates in terms of guidance. So the supply and demand balance, you can see that here on the left side. Inventories by category, you can see here. You can see that wholesalers have come up over the past couple of years, and same thing with the retail trade has come up over the past couple of years. Really recovered pretty nicely from those COVID lows. So that's good to see at least. So, you know, that's kind of all I want to cover about this earnings right now. Obviously, there's a ton of issues in this company. You probably get that if you're watching this video. So I'll leave that there. There's issues within this company, things that need to be solved, but at least we still have that support from Wall Street, which is very important. Good to see. If BlackRock or State Street were to throw in the towel right now, that would really be something that we probably couldn't handle as a stock. So good to see that the largest asset managers in the world are still kind of hanging in there. And then broadly on Wall Street, so we have 3 buy ratings from Wall Street, 3 bullish ratings, I should say, and 3 bearish ratings on Wall Street. So overall, Wall Street is somewhat split on the stock. And then with that being said, let's take a look at this company's short interest. So we have 20% of the float sold short right now. For those that don't know, we also have a 7 days to cover, which basically just means that it takes 7 days of average volume to cover the shares that are sold short. Typically, when we're looking for a short squeeze, we're looking for a number over 10. So to be at 7 isn't bad, but we're not really screaming short squeeze yet. And then Fintel also ranks out the top stocks that are most likely to have a short squeeze. And Fintel actually ranks this company within the top 14% of stocks to have a short squeeze, as the stock ranks out as the 598th stock in terms of most likely to have a short squeeze out of all the stocks that they cover, which is almost 4,400. And then we can see here that the short borrow fee rate is 10%. For those that don't know, the average short borrow fee rate is anywhere from 0.3 to 3%. So to be at 10% is basically implying that it's more expensive to short this stock than other stocks. So it costs a short seller more money to short this stock than other stocks, which is a signal of a high likelihood of a short squeeze. The higher this number, basically the more likely a short squeeze is. So it's not anything crazy. I've seen 190%. I've seen crazy numbers, but we're definitely above average, which is notable. So with all that being said, there's an old saying, old Warren Buffett quote: "Buy when others are fearful, sell when others are greedy." Maybe you could apply that to this situation. Maybe you just hate the company. Maybe you think it's going to zero. That's your choice. I don't give financial advice. I don't tell people what to do. But what I will say is it's a good thing that Wall Street hasn't thrown in the towel on this stock. I think that's the one glimmer of hope for this company. I shouldn't say one, because there's others, obviously. But that is kind of a major glimmer of hope, is that Wall Street is still bullish on this stock. And I'm really rooting for this company. I hope things turn around. So with that being said, if you enjoyed this video, please leave a like and subscribe, and I'll see you here next time.